Greetings, this is Jeff Scott, and this is my top-down review for 12/26/2021. First, I'd like to wish everybody a Merry Christmas, Happy Kwanzaa, Happy Hanukkah, and wish you all a happy and safe, healthy New Year's. Not the same under COVID as it's been in the past. All our travel plans to the Northeast to see my grandchild and my kids got canceled. All because of COVID-19. So maybe 3 years would be the lucky time, and maybe next year we'll actually get some kind of normalcy. I titled today, Will Santa Rally Us Back to New Highs? Last week, I was looking at the market and still thinking we're in a topping process. And we had a big reversal come Tuesday. And now the question is it enough to turn us back to bullish? Do we threaten new highs? Do we get another double or triple top? I mean, let's take a look at what the market is showing us. Again, my name is Jeffrey Scott. My email address is hgsidoc@gmail.com. And let's take a look on that journey. Start with the typical disclaimer. This is for education purposes only. Anything it recommends in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I'm not affiliated with any software vendors or trading companies. That is subject to change. I paid for the tools that I use, and trading involves risk, and you are solely responsible for any investment decisions you make. I've done these as an independent for decades, 2 of them, in fact. I guess that's plural. I enjoyed doing them. During a period of my, quote, retirement, I did some live education and some mentoring. And I'm retiring again in a year. This time it's for it. And I'm looking at opportunities that I might do that, can potentially give me some financial reward from the trading aspect of the education, etc. But stay tuned to that. Trading involves risk, and you are solely responsible for any investment decisions you make. I always call this slide out. I make changes rarely. And to me, I'm not a brand. Maybe I'm going to create a brand, but I'm not a brand. All right. Therefore, like many of you, I can go into the marketplace. I can find people that I respect, that I think are smart people, and I can learn from them. And then I could put it all together and create my own style of trading. I'd call that, or Ian would say, be your own guru. And I would say, become your own trading guru. It's your opportunity is to learn and combine. That's what I've done. So you'll hear lots of names mentioned as I look at charts and my scanning. And many of the folks that I've learned from are right here. And everyone here I still learn from on a day-to-day basis, of course, except for Ian and George, which are trading in heaven right now. I own a lot of software. I'm thinking about making my life a little bit simpler and consolidating. But right now, if you come into my home office where I have not as many monitors as I did before, you'll see TradeStation on one, Thinkorswim on another, and Wealth 365 on a third. And then the fourth one would be using some of the analytic programs like Hgsi and EdgeRater. You'll see the Q tools, the Dr. K tools, and increasingly you're going to see the ITP and TRP tools from Rob Hoffman, and I'll talk about those. And as always, I enjoy my relationship with John Person, which I've learned so much from, but I also love his indicator sets. And whether I'm looking at TradeStation, the skinny down version that's available on Thinkorswim, or what I use in HGSI. Why is that there twice? It is there twice. That's interesting. Here's the website for HGSI. Again, I have no financial relationship. I get nothing if you sign up. I've done these to sort of support new users to the program because the user interface is not necessarily the most intuitive, although it's an incredibly powerful program. And under investing strategies, you'll see many movies. I might dare say hundreds of movies from myself and Ron Brown of how to use the program, and then still a free 30-day trial. So last week I felt pretty good that we were on the way down. And on Monday it certainly felt that way. Now, if you look at the markets last week, they were up 3%. When you look at my list of various lists, the vast majority of them were up. So what happened? Well, we reversed. Now the question is, are we in a V-shaped recovery and are we going on to new highs? Or were we just at the bottom of the Darvis box and we're just bouncing, we'll go back and test those highs? I don't know that. I know that it certainly felt on Friday when the market, or Thursday rather, excuse me, that the momentum was turning up for the week. A very sharp contrast to a week before. Now, it's also important to heed this comment here. HGS, high growth stocks, IBD 50 stocks, they go up like rockets. That's why we trade them, because when the market's strong, you can make double, triple, quadruple your money. But when the market's weak, you'll get chopped up into little pieces because these things fall like rocks. So I think we still got to be careful. But I think the reversal this week certainly got me to lighten some of my hedges and get ready and start participating a little bit more on the long side. So if we are starting out here on a new bull run, which I don't personally believe, then I should be loading the farm, loading the boat. If I think we've just started another one of these legs up in this sort of trading range, then perhaps what I want to be doing is playing it long but being careful. So I'm going to be in between stage 2 and stage 3 this week. I entered some new positions last week. Most of them are things that I saw in the weekend review last week that I thought might be worthwhile playing. I reduced hedges as the week went on. As I said last week, Monday wouldn't be so bad if it was sold off because of those hedges, but I have to get out of them quickly or else it reduces my upside. And you'll see on my return for the week, it was very positive, but I underperformed because, well, the calculation doesn't, it looks at Friday to Friday, so it really doesn't measure how I got rid of those hedges. I'm also going to say it later, but I'm going to be close to the exits because I still am worried about this market. Now, part of the evidence of how strong the market was a sea of green. Now, there's certainly some spots of red here. But for the most part, there is a lot of green. Real estate looks weak. Staples look weaker. In utilities, none of that is a surprise because those are the defensive plays that have been holding up better. Let's take a look in Thinkorswim at the major markets. And let's maximize this. Maybe before I do that, notice the colors on the top here are all green. This is the S&P futures, the Nasdaq futures, the Dow futures, and the Russell futures. And that just gives you a hint of the bullishness of the market this past week. So most of those comments up at the top are flags or these bubbles here, that labels that Bob Meager had made for me. And I love the labels because it makes it so much easier to see what's going on. Plus, you could see here, for example, up at the top, the range, which is not from Bob, percent change in one day. The forces are both green, the 2-day and the 13-day force. There was no pocket pivots, or else they'd be green. Here is the move in, this is the percent B that tells me I'm 85% of the channel at the top. There was no kahuna. There was a mobile breakout from a squeeze. It's in a daily bongo. So I can tell that just by looking at that label. Now let's look at what the stock chart is telling me. We pulled back here on Monday. We undercut the 50-day moving average. And Monday night felt like this could be that going down scenario. Tuesday, we reversed. Even took out Monday's high. And we kept going on Wednesday and Thursday, closing near the high of the day. Now, somewhere in this area here is probably the closing high. I guess we took out that out. So the closing high is up here. So we have a new closing high on Friday. That's got to be bullish. And the reason why the little white cloud here is not on Friday is because the high of the day was greater on the prior Wednesday, Thursday, or Thursday, Friday, on the prior Thursday when there was a reversal down. So how can you be bearish when you see lower left, upper right? You bounced off the 50, which you did here, you did here, here, and here. You got a new John Person buy signal, and you're attacking the prior highs. We'll look at reasons not to be bullish perhaps as we go, but taken at face value, I think that makes me want to be bullish. Now, this here is bothersome. There's very little volume on this rally, and that's certainly not a surprise. And think about the week that's coming. Are you going to be sitting by your computers all day? You going into work to work? No, it's vacation week. So you might expect low volume. Now, what happens in low volume? Low volume is amateur day, amateur hour. We'll be trading, not the big pros. We can whip this market around. So there could be some low volume volatility this week, which I probably would discount some positive or negative effect of that. So are we going back up for a quadruple top area? If this is one, maybe a triple top, this is the second topping area. We're now in the third. So there's got to be resistance here. Look at how many times we reversed here. Or do we break on through and go to new highs? That's the question of the week. And it's a strange week because of the low volume to do. Let's look at the Nasdaq Futures. Same story, don't need to say anything else. Bad day Monday, great day Tuesday, continue Wednesday and Thursday. The high's back here a little further back, November 19th, and we're below prior closing highs. So we got room to go on the NASDAQ before we get back to old highs. How about the Dow? For whatever reason, that wants to go this way. The bullish cake is lower left, upper right. The bullish take is that although this is much looser, we have bounced off the 200 here several times and held. And you can see we came back and touched it on Monday. Not a shocker that we held. Barreled higher, still have to get back to early November, mid-November levels to take out the highs. The other thing I see when I look at this is, boy, this has been a very sideways market going back to May. Now, am I bullish or bearish on this? I still got to be bullish, but maybe a little bit less bullish than the other two markets, the NASDAQ and the S&P. And then the ultimate sideways move really the entire year. I mean, going back to February, here's that bottom of the Darvas box. We've been in a sideways move since February, and we've touched this line 1, 2, 3, 4, 5, 6 times. That's a pretty powerful story there. Small caps have basically gone nowhere since February of this year. Now, if I look here, then as I showed you here, this pretty much traded down to the bottom of the box and bounced. So unlike the others, this is below its 200 and its 50. So it's got a little bit more damage to repair. But, will this thing be pulled up by the other markets? The VIX, if I want to be bearish, I tell you that the VIX is way off where it was a year ago when it was in the 15 range. All right. It's up here above the 50 and the 200-day moving average. Here's where it peaked with this market pullback, teased us on Monday, and it's come down. If I had to call out what I think about the VIX, I think the VIX is concerning. It's certainly not pacifist down here. So I think that has to keep me a little bit alert. And if I look at the dollar has gone sideways and had a sell signal come in a kind of a shooting star looking candle on Thursday. And if you listen to me, you know that I think the Dow has been hurting my small caps. So I would welcome a pullback in the Dow. Now, if we look quickly at the weekly, and I'm just going to look at it here, you can see how far we've come, the sideways move on the Dow, the really sideways move on the Russell with the false breakout there. And then I think the most important thing is what you can see down here at the beginning of the year, we were at a much lower base on the VIX. And you can see that the dollar is reversing here, but it's reversing in the middle of its range, even though on the 1 year chart, it's had a big run this year. What about the expected move charts? And I kind of got to believe what I see on the expected move charts, I hit the wrong button here, is bullish. So if you remember, the expected moves are the market makers setting the price of an at-the-money straddle, meaning you're going long a call and long a put, and you expect an outsized move, you just don't know which direction. Now, the long call, the long put, the premiums added together equal the amount of movement, either bullish or bearish, that the market makers expect. The more movement, the higher cost the options, and that makes sense. So you're throwing a bet that says, I know more than the market maker, and I'm willing to risk it all that I'm going to get outside that move. Well, you're not really risking it all, but you're risking all of one side of the trade for sure. So the expected move charts, basically the expected move charts, so that's interesting that it hadn't updated yet. I guess maybe because of the holiday? Who knows? The expected move, let's see what the expected move would be on the week that's coming. How do I find the expected move? I go into trade, type in SPX. You should see the S&P 500 index. Awesome. I look out weekly, which would be the 31st. And it here shows me that the expected move is pretty darn big, isn't it? It's plus or minus 60 points, or 120 S&P moves, points. Now, if I go down and we're at what price? 47.25. I probably would save my time if I made this less number. All right. If the expected move is plus or minus 60, then typically if I buy the long call and buy the put, then together they should cost me about $60. So at the money, the ask on the long call is $31, and the ask on the short or long put position is $31. It would cost me $62. So if I was to map out on this chart the coming week, the white line is going to be at the close here. The green line is going to be $62 up, and the red line is going to be $62 down. Now let me go back to that prior chart. You can see the approximate value of that spread right here. But what I think is most important is to compare that number to what it was. It's not going to do it. Never mind. I don't have it up here, but I think it was closer to plus or minus 60. I think we were in the 50s last week, but I don't remember exactly. Senior moment. So you're going to map this out, plus 60, minus 60. Now, we also know that the market makers are smart, and that about 85% of the time when I go back and look at the data, the price is going to close within the green and the red. Now, if it closes inside the green, what happens to your long put? It expires worthless. So the market maker won one side of the trade already. Okay? for you to be profitable on the trade, you've got to cover the one that loses. You've got to get above the green or above the red. Market makers don't like to lose money, so they price them so you stay within. Well, let's see what happened this week. On Monday, the S&P traded down, touched the lower expected move, and Tuesday it reversed. Wednesday, Thursday traded above the expected move and closed just outside that. So the market makers lost a few dollars on that trade. All right, so ES above. The Nasdaq, exact same story, though it didn't touch the red line, and the Nasdaq closing above the green line. So that's two markets that outperformed expectations. What about the third? The Dow stuck in the middle with you. So the market makers made money on this, although to break even, you just had to get to the green line. But again, touch the red, trade up to the green the rest of the week. The Russell, like the Nasdaq, like the Dow, and like the S&P rather, and the Nasdaq traded down and up and closed outside. So I've got three of the indexes who had such bullish moves they got outside the expected move. Now, it is not unusual for that to continue. You could see here, close below, trade below, and a reversal. So that is probably a bullish signal. If I look at the VIX, stayed within its range. And if I look at the dollar, traded in the lower part within its range. And for whatever reason, it painted on the dollar, it didn't paint on the other guys. Well, I suppose I need to turn off Thinkorswim and turn it back on. So it gives me a sense of what the market did. Now, again, why do I look at expected moves? Because would it have changed your approach to the market on Tuesday if you saw this come down, touch, and trade up on Tuesday morning? It did mine. Underneath what happened this week, rates rose a bit on both the 10 and the 30-year as shown here. Rising rates are good for banks, regionals, insurers. Large caps lead as AD lines and indices rise in attempt to take out prior highs. So white is the AD line, green is the index. So you see on the big stocks, both the index and the white line are not at higher highs yet, but they're moving that way. And you contrast that to the small stocks, which both turned up a teeny bit this week, but are way off their prior highs. NYSE looks like the small stocks, the various indexes, as called out up here. The diamonds, Qs, spiders are here. I believe this is probably Russell. Transports are buried within here. All of them turned up on the week, but except for the yellow, which is the spiders and maybe the Qs underneath, these things are all off their prior highs a bit, but getting close on those larger cap names. And look at the performance of the TLT, bonds up, rates up, bonds down. Breadth improves on short time frame. Stocks above the 200 went up a bit. Stocks above the 40 went up a bit. And this one is one of my favorite ones that hopefully I can recreate in Wealth Charts or another platform is 3-month new high, new lows. Take all the stocks in the market, or you can look at the NYSE. You could probably do it in the Nasdaq. Sager's broken them out by market, and you can get a sense what are the percentage of the 12-week or 3-month new lows or new highs, and this is the ratio of new highs to new lows. And the cool thing is, every time you peak, you roll over. Every time you hit the bottom, you go up. Now, most of the time, you're going to go up and down in the middle. But where this comes in really handy would be periods of a big market move, and it can get you in or out quicker. The McClellan, as I look at this, the thing that interests me the most on both the daily and the weekly is the question, will the oscillator get above these earlier in the year highs and break this cycle of negative bearish divergence? Buckets, massive change this week. 74% of the stocks now are above the midline, the Bollinger Band. The beauty here is that not too extended to the upside. So bullish can go higher. Hindenburgs. Well, no Hindenburgs on the Nasdaq or in the Dow over the last week. These two that came in here are still bothering me. But most importantly, on both the Nasdaq and the NYSE, the number of new highs has increased, while the number of new lows have now dropped them below the threshold that was enough to turn them red. This two Hindis here bother me, but right now that just keeps the hair up on the back of my neck, lets me know we're not out of danger, but I got to pay attention to the falling new lows. Market tone. On Tuesday, we had big kahunas or kahunas across the board in all the major indexes, and that was enough to flip the Woody indicator, which is this column here, to all green, so broad-based market rally. Now the bull is back is what I titled this because, frankly, everything's above zero. And if you look at performance of the market versus ERG, remember we throw out the head and we throw out the tail because there's very few stocks here. Here's the number of stocks, okay? Flat, maybe trending a little bit higher for higher ERG, but in the 3 to 4% move is a major move in this market. If we look at return versus EPS, relative strength or group rank, being a high relative strength stock was good. Good earnings was good this week. If we look over here, as I said, I entered the week with a heavily hedged portfolio, which I started to cover. So this would look at if I had no covering, didn't buy anything new, I would have been up 1.43. Again, starting Tuesday, I was getting rid of my hedges. IBD 50 type stocks, investors.com in yellow, really outperforming over 4%. RS line blue dot 3.25. The weekend review from last Friday 3%. Market Smith 250 growth, which is currently 300 stocks, is also approaching 3%. Here's the S&P 2.38 and some of the others that my buy list. So it was a good week and all. Last week I was above the investors.com stuff. This week I'm below. But again, this is not necessarily reflective of anybody's portfolio because it doesn't take into account position sizing, long versus short, or any changes that might have been done during the week. It just gives me a sense of what different stock groups, how they're performing. This is from Sager's work, and this is in meta stock, something I'd like to reproduce elsewhere because most people don't have that. And it incorporates a lot. It incorporates in orange, how often is the 50 above the 200? Well, to me, that's a sign of a bullish market. So we've stopped dropping here, but it'd be nice to see it turn up. White is how many are above the 200, and yellow is how many are, white's above, yeah. So yellow is above the 50, white is above the 200, and red is the 50 above the 200. So big turn up, and you can look here at the S&P 1500 turned up, the Dow turned up, the Nasdaq 100, the S&P 500 all turned up. That's great. What he has here are advanced decline line. You can see the strength on Friday across the board. He has up-down volume. That's important too. It's not just how many advancers or decliners, but are there more volume behind the advancers? New high, new lows. You could see that at time of market corrections, you start to see a lot of new lows. We're seeing a lot of new highs here. Now, I didn't give you enough to see it. He actually has come up with, here it is. You'd have to probably squint or use a magnifying glass, but these purple things are skull and crossbones. And he's now incorporated into multiple charts. I don't have the other ones here, but here is market, a total view of the market where we combine the indexes, and you could see the Hindenburg Omens occurred before the sell-off, and it picked up 1 overall before the sell-off at the end of 2 weeks ago and Monday. Down here are distribution days. You can see we're looking at 6 different indexes. Since he collects the Russell data, maybe, Sager, we could go to the Russell as well. But you can count the dots on a given day. When you see 4 dots, you get very concerned that the market is at risk of rolling over. And he likes to point out you haven't seen the market collapse unless you have 4 or more dots, 4 or more markets in distribution. Now, these do not line up perfectly, so you have 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Sector strength improved, mostly green. If we look at the Q tools, now this is S&P 500, this is S&P 1500. We could see that we finished the week about 3/4 of sectors about going up, industries going up 84%, 77% of stocks. Here he duplicates my buckets and shows you 2-day performance so you can see how it improved from Thursday to Friday. You can tell that if you've been watching this, we've had a big improvement in the pies. And in fact, this week was a very bullish looking week, despite what happened on Monday. Enough to make 2 weeks better than 50-50. If we look at sector performance over 5 days, 10 out of 11 were up. The one thing that was down was utilities, again, defensive. If we look at the last 2 days, 11-0 on Thursday, and on Friday, 8 out of 11. Or at least 2 days it was 11-0. Leading groups, communication services, industrials, and information technology. Those are kind of risk-on types of groups. The risk-off, real estate, utilities, and staples, are down at the bottom. So we could see where a month ago and 10 days ago, these were blue, they're now magenta as the market has become more risk assuming. If we look at there's 147 industry groups, and in the top 3, these are the groups that came to the top. These are the ones above 130. This gives me a list of stocks, the 2 stocks that came as the crown candidates. Great earnings, undervalued were KNX rather, which is Knight Swift Transportation, and CAR, C-A-R. Of the 2, I thought KNX was more interesting, with a person buy signal off of support on the daily within the center of the range, in a big weekly up move, which sold off the prior week and regained the trend line on Friday, or Thursday rather. I keep forgetting the market was closed. So this might be one to consider. Truckers did look interesting. Others did as well. The canaries, oh yes, notice I fixed this. Bookings instead of Priceline. And why? Because Meta instead of Facebook. All right, the same companies, just they changed their name, and we'll see when Facebook changes their ticker. Notice that if this was a stock, we'd be in it like a fly to fly paper. Pullback, flag, and a breakout. Closing right about at its chandelier stop. Mobile breakout, New John person buy signal, Kahuna. I think this looks very bullish and would hope to see this ride its strength and attack new highs. Now, if the market decides it doesn't agree with me, and this is Sunday morning, I have no futures, I don't have a crystal ball, I'm just looking at charts, then, bets are off. But if I had to bet one way or the other without any other information, that looks to me more bullish than bearish. And just to talk about Monday, a lot of people aren't hard at work. Low volume, and again, low volume can whipsaw the market, and we may get some reports of how bad COVID was or how much transmission occurred over the high spreader events known as family gatherings. Know your news and earnings. Notice you've got CalMaine and Fuel Cell, and that's it for earnings. And surprisingly, you do have some important news on Thursday the 30th. You've got some jobless claims and a PMI. And notice Friday, no news, but Friday's a normal trading day. It's an anomaly where we don't get a day off in the market this New Year's. And the reason that I understand it is there's a couple of exceptions to the day off rule. And I think one of the big ones is when New Year's occurs on a weekend, especially Saturday, they would normally give you Friday off, but since Friday is the 31st, it's the last day of the month, the quarter, the year. It's a big accounting day. You don't get to take it. It's not a free day. Although in my office, we gave people off, I think, on Monday the 2nd. Judgment call to hold stocks over earnings days. Bad judgment to not know when your stock's earnings date is scheduled. So very true. Not much to worry about on that this week. So we closed higher Thursday, despite COVID-driven market pullback on Monday. Major markets end of the week higher on decent economic news. There is an approval of COVID pills to reduce the severity and increasing belief that this variant is much more infectious, meaning easier to get it, but perhaps a milder illness. Of course, being fully vaccinated and boosted doesn't hurt. I will tell you that despite all the vaccinations, I went through the first year and a half of COVID hearing about a lot of people who I knew that had COVID. And in that category would be a couple of older parents that died. A couple of people I work with had COVID, but nobody in my extended family had COVID. This past week, one of our siblings, several of our cousins, and lots of people we know very closely had COVID. All of them seemed to have minor symptoms. All of them were vaccinated. That really plays into the fact that this might be much more infectious or contagious. From a top-down perspective, we can see this market has had quite an improvement over the past weeks. And considering the strong seasonality and Santa Claus effect, I am more bullish, at least for the short term. And as many will report, topping is a process, bottoms are an event. The Hindi signals, divergences, narrowing participation, deterioration in many stocks suggest to me that we're still in this topping process. And new highs would be nice for my long positions, but I'll continue to position myself close to the exits. As I said before, have a safe and happy holiday. Let's look very quickly at TradeStation for one picture. Look at the turnaround in the Nasdaq. So last week we were sitting here on this red candle, the middle red candle. We had a sell signal. We were approaching the bottom of the envelope, which was the only bullish thing there. We had a new weekly sell signal we were dealing with as well. Well, big reversal Tuesday. You can see the blue candle here. A new buy signal came in. Green candle, green weekly. And all of a sudden, the Nasdaq looks a whole lot brighter, not quite up to the upper envelope. And as we've said before, you can ride those envelopes for long periods of time, both up and down. And we're at 54 in the high jump, so we have plenty of room. Let's just quickly review the high jump. E-mini looks like the Nasdaq. High jump is at 57. Russell, much lower in its program, but green with a buy signal. High jump -3, so it's got plenty of room. And the Dow high jump is 31. Why do I care about that? Because when we were up here, the high jumps when you get to the top, oh, you're not going to do that to me, are you? Let's see, that was the Dow. Let's look at the Nasdaq. The Nasdaq, I think, has been the one that's most sensitive on the high jump. Yeah, you could see on prior runs up 100. You can look up here before it sold off. $94.92. The high jump to me is sort of that signal to be careful when you get a 95 or above. And the fact that we're in the 50s or below makes me feel like we have room to run. Major Markets Plus, which is part of Ron Brown's set of indexes he creates for the group. If you look at using the top-down view, which is mostly price and volume, looking mostly 1 day, some 5 day, and some 3 weeks. Number one performer, make sure you're rated by raw combo, was FANG, Nasdaq, Russell 2000. Well, and then ARC Innovations number 5. So you know, beyond a doubt, that if you're a growth stock investor, you're buying mostly Nasdaq, a lot of fangs, and except for the fangs, probably some small cap growth. I mean, what could be better for you on that list? If one looks at the S&P 500, again, the nice tight run up here, we bounced off the moving averages, mobile breakout from a squeeze, a new person buy. This little fella here is called a Eureka. That is a Hgsi version of a follow through day, which occurred on Tuesday, and a kahuna. You have a lot of bullish signals. If I was a betting man, we take out the prior highs. Now, that's not that much away, okay? And that might be a concern. But if I, as a betting man, we go higher here this week on the S&P 500. But then again, I don't bet. I like to win money, so I don't bet. I'd rather trade in the markets. The Dow, further below its highs. I mean, is this a inverted head and shoulders and we're about to break above the line? Who knows? I think you can call head and shoulders almost everywhere if you squint enough. But you come off the 50, mobile breakout, person buy, PSAR reversal, chandelier reversal, person, just had a Eureka and a kahuna. Bullish or bearish? I've got to be bullish. If I look at the Russell, look at the Russell first. Here's the sideways market guy, and we just about to retake the 200. I think that one worries me because we failed it here. Are we gonna, you can look at how many times these things have been support. So that's potential resistance. I'm going to be watching that. A failure there might be telling me something. A break above it will be very supportive. If I look at the Nasdaq composite, right below its chandelier stop and a mobile breakout from a squeeze, a new person buy. Here's a Eureka and the kahuna. I think this looks poised to go higher. And again, unlike the S&P, it's got a ways to run before it takes an assault on prior highs. I'd like to believe that prior highs are in the cards. I think what the Russell does may be very telling. Will you get prior highs there if the Russell fails at the 200? Don't know. Here's a composite just for comparison's sake. Here's the 100, and the 100 looks very similar right below the chandelier stop. Now I like to go further. Let's look at the fangs, microsector fangs, FNGU. Is this a good place to buy them? Has been, right off the 200, took out the 50. You've got probably got a lot of overhead supply and resistance, and they're not all behaving at the same time. But FNGU looks interesting here. Obviously, it would be much safer above the 50, but then you would have given up 15% of the rally. Buy at your own risk, folks. IBD 50, this thing has been hammered, and it's way down. And again, it's kind of where it's reversed. Here and here and here and here. It's probably a good place to be buying, buy low and sell high, but it's got to get above its PSAR dotted chandelier, the 200 and the 50, to be in an uptrend. It's got a long ways to go. It seems to be like the Russell in a Darvis box, but you want to buy those at the low. Risky. Biotech. Over the last couple of meetings, I've talked about how this looks like it has bottomed, and it has. Now it's got to get above the 50 and keep on going. And the difference between buying something with nothing above it and those that have a lot of overhead supply is look at all the things that have been here to slow it down. The 17, the chandelier stop. Now we got to get through the 50, which it failed already once. Then it's got to get through the 200. So it's still got a lot of work to do. Definitely moving the right direction. Something that's been leading the whole time, Philadelphia Semiconductors. And, they're basing here, flagging. Are they ready to break out? They could be. A lot of semis look good on my review. Let's look at the dollar. Actually, before we do that, let's just look at the ARKK. Kind of looks a lot like the IBD 50, doesn't it? Small cap, growth, plus some Tesla rolled in. It's come off its lows. I'll leave it at that. US dollar bullish. Sure would be nice to see this roll over, in my opinion. We got a sideways move, and are we breaking down, or are we just going to trade down to the chandelier stop and the PSAR dot? So I've got some support sitting here. But if I look at this, I got a mobile breakout from a squeeze. I got a new person sell signal, a bunch of pocket pivots to the downside, a kahuna to the downside, and look at that volume on Thursday. I'm sorry for being confused about the dates. Not used to Fridays off. So I think the dollar's at risk. And, we talked about seasonality on gold, and percentage-wise, it's done okay from back here. It still hasn't gone far, but is it ready to break out? Mobile breakout from a squeeze. The weekly bondos turn green. You got a kahuna there. Here's your long-term resistance. You're getting right up to it. A break above that might be very interesting. Not to say that some of my friends haven't made money off of it already, because I know several have. They sent me little notes. And you can see you have had a move off the bottom. This is GDX again. Is it a great position? No, it's still in a downtrend with lots of moving averages above it. So you got to be careful with something like that. And silver, I think, looks like GDX. Yep. All right, next I'd like to look at the industry groups. There's been a fundamental change here, folks, from last week and the several weeks before. Notice we have 174 groups. If I go to 2-day force, I got 84 up. If I go to 2-day force down, whoops, wrong one. I've got 4: apparel, other retailers, tobacco, and utilities. Well, not surprised about utilities, but notice these 2 of the 4 that are down, other retail and tobacco, actually had great 5-day weeks. So, or the last 5 days were good. And if you think about the last 5 days, that's a really bad Friday, a really bad Monday, and then 3 positive days. If I look at 5-day up, you can see 81. So we're not just 2-day positive. When I see 5-day positive as well, it tells me that the market is starting to shift. In this case, shift to the more bullish stance. So if we look at 2-day up, what I do is I start by looking at the top 10 industry groups as ranked by raw combo. I highlight it and I right-click on it, change to index group, double-click, I'll bring up Tesla. So what do you see? Now let's just talk about my chart for a second. There's a lot of stuff on this chart, and if you haven't followed me for years, you're probably thinking, is this guy nuts? Well, if you ask my wife, she'll agree I'm nuts. But what's on this chart? First thing is, obviously, it's candlesticks. These little red hashes up here that are hard to see are the Hindenburg Omens. All right. I like to see those on my chart because it tells me if I have to be concerned about the market. Now, if I go back, you'll see not every Hindenburg Omen is a problem, only about 1 out of 4. Now, once you get the second within 30 days, you're confirmed. And we have this here. So I think they still matter. But on right now, my bullish cap is on, not my bearish cap. Then I have the weekly bongo, which gives me sort of the long-term trend. You could use this as a trading system for in and out of the market. The next is the high jump oscillator. When this oscillator here, this green line gets up to the top, it's extended. When it's sitting on the bottom, it's extended to the downside. And then I look for triggers. I have lots of triggers on the chart. The green lines in the high jump are green candle low. Tells me I got the lowest low in the last 10 plus days. And I finished a green, meaning above the close above the open. That's a reversal. Red candle high is the opposite. I'm in an uptrend. I open up higher and close lower. I get a red candle, and there's no red candle that is to the left of me. So I've got the biggest down day in at least 10. The next column are Bible gap ups as defined by Morales and Catcher. Then a simple squeeze of the Bollinger Band coming in the Kelter channel. These are the yellow line here. These are the David Elliott mobile breakouts. Down here are the John Person buy-sell signals. This is a paid add-on to HGSI. Here's a Person market catcher, his relative strength tool, paid add-on to HGSI. Pocket pivots from Gil Morales and Chris Catcher. Then I have two different windows for Eurekas and Phoenixes. One is calculated on the NYSE, one is calculated on the Nasdaq, and on the bottom I have the kahunas. These are a percent beat change impulse indicator. I like to see things line up, okay? If I was looking at this in TradeStation, I would be looking at something that had my dots on it, and I'd be looking for my dots to line up. So without even looking at the chart, I can tell you that this was an interesting day right here. Why? Because I had a pocket pivot, a mobile breakout, I'm in a squeeze, my PSAR reversed the day before, and I had a reversal candlestick, a green candle low. So let's go and let's look, is that a green? Oops, it's not a green candle low, that's a kahuna, my bad. The green candle low is looking at this one. So I got a bunch of positive impact here. Here's my Bongo ribbon, and my Bongo daily went from red to green. My monthly and my weekly are green, which means I'm in a long-term uptrend. This was a pullback and an uptrend. And then, we'll skip this, you can see a John Person buy signal came in. And that would have been a short-term decent place to buy the stock. Kind of a short-term being the word in this choppy market. So these are very helpful to me of finding stocks at a good buy point. In the chart, the dots are PSAR, while they're PSAR. The red and green lines represent chandelier stop. I have an 8-day exponential in purple, and then 1750 and 200-day moving averages. The blue line here represents relative strength. The black line represents industry strength. So I like to look at the right edge. What do I see? Tesla has been in a intermediate term weekly downtrend, which it has been. You can see it on the weekly. It is not at the top of the high jump. It had a mobile breakout, a break above the 50, and a flip of the chandelier and the PSAR dot. A new John Person buy signal came in on Thursday when it had a kahuna and a pocket pivot, a kahuna and a pocket pivot, as I said. And this green thing here says the market is turned around with a eureka. So I see a bullish chart in the setting of bullish market changes, and I click, right click, and then quick add to group, left click, buy watch. And I add that to the stocks I'm interested in. The next one, and I go only look at the ones above the index unless I know better. Cheating. I look at NEO, maybe it's a good time to buy. I don't like buying things in downtrends. Below the index, I'll look at one, which is Ford. I think Ford looks interesting here. I own Ford, so fair disclosure. Giving you a high base here. It's a third or fourth, so it's a later stage base, more high prone to failure. And I've been saying for a while now that maybe these guys are very undervalued, not just Tesla's very overvalued. And with the electrification of the Ford fleet, take a look at the F-150 Lightning, which sold out in orders. You look at the Mustang, which I actually saw one in real life. It's kind of cool looking. I like this. I own it, and you got a nice base here. You just had a squeeze, person buy, and a kahuna. Now, my style is I don't buy them just because I see a setup. I want to see a trigger. So I'm going to put this into a buy list, and I may look at it later. We'll see. That's it. So I right-click, left-click back. Now left-click semiconductor devices, which is number 2. Right-click, change the industry group. So Micron, I didn't want to believe this one because DRAM was so bad for so long, but it had a great move, breakout on earnings, big move off the bottom, breaking out again on Friday. On Thursday, it had on Tuesday, it had a Bible gap up. What a great day to have earnings. Mobile breakout from a squeeze, person indicator, pocket pivot, and the kahuna on a day the market turned. I look at the earnings per share growth is still very strong compared to the multiple. Yes, this has run a long way from 68 to 96. You know what? I think it's going to run even more. Put that to my buy watch. NVIDIA, not yet run. So those two, well, certainly Micron, I'd be interested in buying soon. As I look at NVIDIA, I see a pullback after setting all-time highs. Remember, this thing had a big split within the last year. What a good buy point. A person buy signal coming in on the 50. But Jeff, how can you buy something the weekly bond goes red? Yeah, I get that. I'm going to switch views for a second. And I'm surprised that the daily bond goes also red. Yeah, I mean, that tells me that I don't need to buy it yet. What I would probably do here, not probably, what I always would do here is probably draw a line in here somewhere. Notice I'd be taking out probably the chandelier stop too. Well, actually, yeah. But I would say to myself, I'm interested in this stock. I'm going to watch this stock, but it's got to close above that line before I'd be interested in buying it. AMD, here's one that did that, broke above a chandelier stop, closed right above it. I'm in AMD, and you can see the pullback and attempted reversal here. Broadcom just keeps on going, coulda, woulda, shoulda, and that's now we get to the index. So we'll look at others later. Biotech is the third one down. The only one above the index is Cassava Biosciences. I can't buy this. Why would this be here? Well, let's see why. It was up 0.61, but it was up on 2.8 million shares. I don't know why this even made the list, but it did. I guess two-day force. Just going down, Regeneron, not now. I wouldn't buy Amgen here. Vertex has already broken out and started running. Still potentially a fair value, but it's higher risk than it was a couple weeks ago. Arcus is one that I like, kind of like that NVIDIA charts pull back to the 50, except this one's broken out. All right. Fourth group down, other financial services, which means Mara. Mara is one of the Bitcoin mining companies. Mara, Hut. What else do I have? Oh man, I'm having a mental block. MicroStrategy. I've owned Riot Blockchain. I've owned a lot of these. I don't own them now. But setting up on support, if there's any strength in Bitcoin, I might be looking at Mara Digital. The rest are below the index. Application software, there's a bunch of these. This one's interesting. It got beat up. It's a cheap, it's not a cheap, it's a semiconductor play. It was up to 100 in March, and now it's down to 18-ish. There's probably a reason for that. It does make money, or starting to make money. It's had revenue growth. You could see this Bongo would say no for a long time. But it had a mobile breakout from a squeeze, a new person buy signal, pocket pivot in Kahuna, improving relative strength while going flatline. You know, that's a divergence there. It also has a divergence in Twig's money flow. This is one that I'm going to be interested in. But remember what I said about stocks in a downtrend like this. Lots of overhead supply. Lots of people looking to get out. Adobe, not now. Activision, I should have bought it last week when I saw this pattern. You know, you can probably still buy it, but right now I got to worry about the 50. It's in the way. DocuSign, have clobbered. Here's another one of those Bitcoin plays. Strangest story. This was a reverse merger with support.com, and the merge price was a big discount to what the price was of support.com after it became very speculative. 2 kahunas in 3 days gets my attention. Mobile breakout from a squeeze. Like Mara, probably ready to run if Bitcoin goes up. Cerner, acquisition by Oracle. MongoDB, kind of loose for my taste, but it did break out above the moving averages. C, one of my prior holdings, which I'm back in it. Sideways move here. This is a deeper cut than it has, but it's actually just down to its May and June lows. Be interesting to see if this can recover. Very typical of a lot of software stocks and why you can't get married. Marry your spouse, not your stocks. High to a low. 45% decline. I wish to say I could say that this is the only stock that behaved that way. It's not. DocuSign, Peloton, Intuit could be considered interesting. Pull back to the 50. NetEase, and then the software back. Number 6, communications. Apple's been a leader. The worrisome thing about Apple, get this story. Decided to buy myself an Apple 13. My wife's telling me I'm an idiot. I buy it, it comes. I put it together, but I can't remember my password for my services. I'm now on day 2, waiting for them to decide they've made me wait long enough to protect me. So someday I hope to get the ability to reset my password. I go for a bike ride because the phone still works, and the brand new phone falls out of the phone carrier, and I ride over it. Those who haven't met me in person, I weigh about 260. My bike probably weighs 60. Guess what happened to my brand new, out of the box, never really left my neighborhood iPhone 13? Destroyed. So now I have the password, doesn't matter because my phone is now destroyed. But the real moral of the story here is not Jeffrey being an idiot. It's that I ordered it and 10 days later I got it. I don't remember the last time I bought an iPhone that wasn't, quote, available in the stores. And I received it that quickly. Just tells me the backlog's got to be a lot less. Stock pullback. It's been a great behavior. Look at this reversal here. It's hard to fight the Fed. It's hard to fight the Apple trend. I just be careful on it. I've sold calls against my position. And if they get called away, they're out of the money, I'll be fine. Cisco already broke out. And then you had a pullback right here, so sort of a cup handle and a breakout. Maybe it's not too late. I don't like the low earnings per share growth. Arista Network already breaking out. All right. So you can see there's a lot of good looking charts. Specialty Pharma's number 7. Only one that made it ICTI. Like this thing for a couple of days now. Broke out here. Probably too far extended. Look at the high jump. You pegged it. I don't like to buy at the high jump. Too much risk. Internet media is number 8. Got a couple. Facebook. You know, if you take away all the noise on Facebook, what a great buy point. Basing on the 50, the 200, all the moving averages have come together here. You've got positive convergence, where the relative strength is improved. There's just a lot of negative news flow, and I wonder if that's going to reduce the movement. Still own some, but I own a lot less than I used to own. Google, sideways move, which is the downside. If I had to bet, it's getting ready to break out. Mobile breakout from a squeeze, new person buy, and a kahuna on Wednesday. Snap, I'm not a fan. Here's another Alphabet. I always would call Alphabet Google, just bad. Investment company index, SPACs, Nikola, you know, maybe this is better looking than NEO. To me, it's still kind of ugly. Bitcoin, is it time to buy Bitcoin? Well, my millennial son said it is. He's made a lot of money just holding it, though. I don't know. I think Bitcoin is interesting here. I don't own any. I've played the miners. I think if Bitcoin's positive this week, I'm going to buy some of the miners. So now when it says investment companies, I guess we need to think SPACs. And the last, I'm going to look at two. We now got base metals. There's some interesting plays in the metals. Here's FCX, copper firming, housing market doing well. Although it's manipulated a lot by China, that looks like it's breaking out. Alcoa broke out last week. Another one is Technico, which is a mixture, iron ore and others. Looks a lot like FCX, doesn't it? Breaking out as well. So that's the top 10. So unlike some of the prior weeks, there's actually quite a few things that look interesting to buy. So I'm going to go a little long this week. Shocker. I'm going to spend a couple minutes looking at my buy watch list. And then for those who might want to see a little bit about my workflow with wealth charts, I'm going to show you a little bit of that as well. So first, let's open up my buy watch list and see the things I'm looking at. And let's change it to something that will show me industry groups. So you'll notice that a lot of these are in those top 10 industry groups. Application software, base metals, biotech, semiconductor devices. Let's just look at a couple of things that I thought were more outstanding than others. Cadence Bioscience, or Cadence Design rather, pullback. It broke out of its chandelier stop on Wednesday, moved up Thursday, mobile breakout from a squeeze. On Tuesday, it had a pocket pivot and a kahuna. It had a kahuna and the Eureka fired, which is on the market. Strong on the weekly chart as well. I like Cadence. Covetrus was a bottom fish. And why did I like this? Well, you have two kahunas here. So in 5 days, you had 3 kahunas. You got major positive convergence here, a mobile breakout from a squeeze, and your kahuna turned green, and you've got earnings coming into this, so it's a turnaround. What does this company do? Something about healthcare, I thought. Health technology and services. I already showed you Ford and Tesla. Stone Company is one of these payment processor companies. And this one looks like that semiconductor play. Why do I have it here? Because at some point I like to do a little bottom fishing. I hate to admit it. Don't write that down. Don't hate me for it. It's gone sideways here for a month. You've got relative strength improving despite sideways price. You have a kahuna pocket pivot, new person buy signal, a close above the chandelier stop, mobile breakout and squeeze. I might be interested. Certainly is not a breakout great play. I showed you Arcus. I think that's one of the better looking biotechs. Again, do your own research. I'm just showing you charts. I'm not showing you companies. I think we talked about this one, or it was on my list last week as well. Innovia, constructive here above its moving averages. NetApp, sideways move here, big improvement in relative strength, so convergence, mobile breakout from a squeeze, took out its PSAR dot and its chandelier. Shopify, not yet, but clearing the 50 might be interesting. Some people might want to buy it beforehand. Star Bulk Carriers, I play this every once in a while. It was great here. It's in chop land here. Look at the fundamentals, the fundamentals. Pays an 10.7% dividend. In reality, since May, it's gone sideways. That's 7 months worth of a 10.7% dividend. So that was about a 7% dividend while the stock did nothing. If you're looking for a dividend play, although I'd be careful because this thing can come down too, Starbucks looked interesting. Coulda, woulda, shoulda, I missed it the first time around would be Ayer Systems, AEHR. Big pullback after a massive run up here. Broke out above the 50. I think that's enough. And then I mentioned truckers were good. Here's Old Dominion was another choice. A person buy signal in a squeeze right off the 50-day moving average. Old Dominion freight lines, not lines. So those are some of the stocks that I looked at. So now people are asking, but Jeff, what is your workflow with wealth charts? How do you interrelate that with HGSI? So I have created within HGSI 3 lists that are important to me. List number 1 is Buy Watch. These are all the stocks that I went through and did that clicking around and added to Buy Watch. There's no way I'm going to buy 53 stocks on Monday or the entire week. But I might want to follow them. So historically, you've seen I could stick them into Thinkorswim, where I have a number of indicators programmed in here in Market Watch, and I could look for a performance. Okay, I can dump them into TradeStation. Similarly, a bunch of different indicators. I could do something different in wealth charts. So what I have to do to get it into wealth charts. So I got Buy Watch before I go there. I got holdings across all my portfolios, some long, some short. And then I've got my, what I call my combo buys, which are from a much different IBD list, my holdings and my Buy Watches. Let's say I wanted to save that and put it into wealth charts. I would save it as a text column. And then I would open up, you have to excuse me because I have to find what monitor it opens up on. I use, yep. It's a spreadsheet. I dump my list in, and then I save it as CSV column delimited text. Okay. Forget the name. This is for demonstration purposes. I then go into wealth charts. Okay, I gotta go into the right place. I'm still learning this. Here's my watch list. So I'm going to create a new watch list, add a new one. So we're just going to do, we'll make one called test. Created it. In my mind, in this workflow, there's too many steps, but I'm working with them, and that'll be one thing I'm going to see if we can't address. I am going to select watch list. I'm going to put this in. We're going to put it into test. I'm going to go choose file. Here's the file we just opened. And hit. And now, these stocks are in that test. So I just imported my list. Now I want to kill this. I already have too many of these. And let's play with the a couple of my favorite features here. Let's go into here and let's find Wealth Scanner. So first, this is a algorithmic system which is looking at many undisclosed technical and fundamental factors, some of which might be mentioned over here. You could look at the technicals, you can look at fundamentals, various fundamentals that you might want to look at. You could look at different, here's insider buying and selling, institution buying and selling, guidance, changes. So I don't look at that stuff. I don't have time for fundamentals. But you come up with a score, an algorithmic score, that's tied to different time frames and this information. Now, I'm not an intraday trader, so I'm going to deselect them all. I care about daily, weekly, and monthly, 4 hours, 1 hour, and 15 minutes. I'll take off some of those. Hit apply. So now it's going to look at those time frames in setting these numbers. And it's given me within that list that I have stocks that it thinks are the leading stocks. Now I've got green dots there and I got green dots here. So this is the ITP trading trading set. Now I'm not here to teach you Robert Hoffman stuff, and I couldn't do it justice because I'm still getting familiar with it myself. But I am able now to look through these stocks and look at the various charts if I want to using the ITP. So since I took a list of mine that's a list of lists, it's pulling up fundamentally and technically what the best stocks are of the group. Now they might not all be in buy zones. Here is his TRP. His TRP set is a complete trading system that might be good for somebody who wants to look at night a small list of things to do and then go to sleep. And the TRP will give you buys and then targets and stops. Everything you need as a trader. So I might leave this combo stocks on. Well, let's switch to TRP Trader. So this is applying that trading system, same stocks daily, and let's just click on this. So what I have here, and I've already filtered the list, are going to be stocks that had a new bullish signal come in and have bullish momentum, that are in an upward channel and have not hit their targets. So they're alphabetical here, but these would be stocks that gave a buy signal today. Now, one of the caveats is that this is a system that gives an intraday buy, but the scanning is end of day. So I would look at, for example, the list of stocks that I gave a buy watch to. All right, meaning I'm interested in them, but I'm not going to buy them unless they trigger. 1, 2, 3, 4, 5. Let's just look at these. Enter plus. All right, so I'd want it to break through that red dot for me to buy it. I'd put my stop at this line here, and here's my target 1 and target 2. So really, you didn't have to do any work. You could have found this on this list by scanning anything. And it's a fresh buy in an up channel with momentum. What's the second one? KKR, one of those asset managers. Now, the way I trade, I'm going to be looking at this here, drawing a line and making sure I'm above, because we're having a flag here. But what I have is a new buy signal with this blue dot, about to take out the red dot here. That's where I'd set my buy price. Here becomes my stop, target 1, target 2. Mimecast looks like a takeout, so we're not going to talk about it. Mr. Softy. Uptrend, pull back, and moving again. And this is TradeWeb, another uptrend, pullback, breakout. So just applying whatever list of stocks, I can identify potential trades. Now I could have gone in here and just put the S&P, put Dow Jones 30, and 3 stocks actually made my very tight caterpillar. So you can get Rob Hoffman's ITP system, which I'm still learning, and obviously are different signals than I've historically used. You can get his TRP system. They have a thing called Go No Go, where much of this is free. You can create your own charts. This is something that I was doing here. Dr. K stuff is in here as well, or will be. Oops, I just cheated. It's not available yet, but it's coming at Wealth 365. I got an early version to work with to see if I can't break it. So as I said before, one of the differences between this and HGSI, and frankly TradeStation and Thinkorswim, is that you'll have things in this that you won't have in those other places. Now, HGSI is a great platform. HGSI is a pretty closed platform. And when you want to add something, you can add it, but it takes time and it requires a lot of coding by Matt and George. Now, this one comes with what's called an indicator marketplace. And as I said, Dr. K is here, as I got it as a demo, but it'll soon be available to all users. If it's in marketplace, it's kind of like the John Person indicator for HGSI. But you have a broad range of marketplace tools here. So a lot of different educators / gurus are having their stuff put in here. Premium indicators come for just being a member. And for example, let's take a new chart. Just stick it right here. Let's make it a daily chart. And let's add an indicator. Let's go to the premium indicators, Alex Cole, Go No Go. Go look this up on the web. Go No Go. Apply it. And you're getting their basic product for free. This is everything under premium are indicators that might be sold elsewhere that come free with the program. I think that's a nice thing to have. All right, so the ability to import my list, run it against Wealth Scanner. How about you're a fundamental kind of person? You can do the same thing, running them against who's got new news, and you can look at various time frames and understand, what's going on. They're listed here. And what kind of fundamentals? It could be FDA approvals, buybacks, social media mentions, insider buying or selling, high short interest. You can pick your time frame and you can filter by price. And I usually do greater than or equal to $5. Okay. They have a number of built-in scanners. Some of them are free. These are free, are part of the program. TRP scanner, you purchase this when you get the TRP set, reset them all. You can see there's a lot more things in there. I like to do the work with filters, so I don't have to look at everything. And the Dow 30, these are all the new bullish on TRP. IRB scanner, this is something he does, that Rob will do a lot of education. This comes with the program. Some of these are paid add-ons. So you got scanning, you got charting. Again, the scanning is end of day. I wish we could change that if you're looking at daily. But you could look at intraday and maybe look at a 4-hour scan instead of a daily scan and get some valuable information that's updated when that bar closes. So the market's open how many hours? 9:30 to 12:30 is 3 to 4 is 3.5. So it's opening at 7.5 hours a day. 4 hours would give you a midday look at how the market's doing. What else do I like about it? There's a lot. I can do some things on charting. Here are hourly, here are daily. These are some of the ratios I like to look at. I set it and forget it. This is the spider, and you can see on the daily the big move we had at the end of the week this week. I can get more days. I mean, this is a line chart for a reason. This is spider versus gold. You can look out over time, and there are periods of time when gold did better than stocks. You think about when that might be. Periods of time where gold did better than stocks. But we pretty much have been in an era of late where stocks are outperforming gold. Stocks versus bonds. If you go back in time, here's March, this is July 2020. Here is, that's not 2020, come on. March 2020. The spider versus bonds, stocks versus bonds fell off the cliff. This is important information. How are stocks doing compared to bonds? Well, I can plot that, look at it every day. Stocks are doing just fine compared to bonds. How about the spiders versus FANG? When FANG is strong, we're going up here. When stocks, the S&P is strong, we're down here. FANG, even though it did better, stocks have been outperforming. How about ARK versus the Nasdaq 100? Well, when ARK is performing, you expect it to be going up. ARK has been underperforming. What about IWB large caps versus IWM small caps? Large caps are leading the way. And what about the spiders versus 50? Spiders outperforming the IBD 50. So that, I learned a lot knowing what's working right now. Spiders versus the equal weight S&P. When I see spiders are going up like this, the spiders are outperforming the equal weight. I know it's Microsoft, it's Apple, it's Amazon, Google, it's the big boys. If I look at the Qs versus the equal weights, the same thing, it's the large guys. So I can learn a lot from these charts, and so easy to set up and maintain. And then I could do this inter-time zones, inter-time frame. These are 1 hour ratio charts. I could look at my indices intraday, daily, my guppy charts, my multiple moving averages. Those who've been to my live meetings know that I spend a lot of time looking at these. Yes, I've created these at HGSI as well, but this is updated real time during the day and the daily. I can run it in multiple time frames. There's a weekly. And why are these important to me? I'll show you why. Oh, you know what? Let me expand the spiders. Now, I've already talked to them. I need more data. And the way you get more data is you keep looking at earlier dates. Getting there. I want to go back, see if they can get me back to 2005. So I would tell you, and I've told them, this is not one of the things I like about the program. We need to get more data on the chart. I've already spoken with their head programmer, Ted. I think he's the head, and I believe he's the head because he's on the calls with Rob when I talk to them all the time about getting more data. I know that there'll be more data on the weekly charts to support Dr. K's weekly indicator for seasonality, but it's not out yet, and that's not done yet. This is just a series of simple moving averages. And I learned this a long time ago, that as long as you're traveling above these moving averages, you're in a really strong market. And that a break into these moving averages, you're getting into chop. And a break below is when you start to worry about you're in a bear market. So I want to be long lots of stocks when I'm above the moving averages. I want to be taking profits and raising cash below, and maybe having some short positions. And when I get in the middle, rather, when I get below, I want to be mostly out of the market or short. Now let's just go forward a little bit. So this is 2002. Excuse me, that was 2007. 2007, we had a lot of teases. We dove into it and we bounced. We dove into it and we bounced. We dove in and we pulled back pretty hard into 2008, as you know. And notice what happened. The moving averages kind of flipped, where the shortest term became the lowest one, and then they formed this way. This is a very bad pattern. So number one, uptrend. I'm outside the moving averages. That's awesome. Number two, I'm choppy. I've jumped into the moving averages. Number three, I'm turning bearish, or I'm in full-blown bear. And number four thing that happened, if I've been bearish long enough, these moving averages flip. This is a very ugly pattern, and one that you want to be careful of when you jump back into the market. So you can see what happened in 2008, and then March of 2009 will be coming in, and what happened? We got back into the channel, so now I'm willing to start nibbling. April, July, we broke above the channel, and you knew enough to be long here. And then the rest is history. It didn't happen until October for the moving averages to flip back into their bullish positions. And then you had some T's in here, and you broke out. And you can look at each of these being periods of market softness. So as long as I'm above the moving averages, I'm happy. And now from 2013, we're staying above the moving averages. 2014, you get periods of a pullback. As long as you're within the moving averages, it's probably a modest correction. Oops. Here's the one at the year end of 2016. Up here's 2016 selling off into the beginning of 2016. I find this to be extremely useful because I can tell where price is compared to the moving averages. Let's see what happened in 2020. Okay, here's December 2019. This was a not so great Santa Claus rally. And now we're running up to 2020. February, little pullback into the first moving average, which is the 50-day, no harm, no foul. That one looks interesting. Big volume and a cut, so you're paying attention now, and this really tells you what you need to be doing. You need to be getting out of this market. And look how that one pulled back. And now you sort of got to that all clear perspective very quickly come May. And you've run up since, for the most part. So again, nibbles of that yellow happen all the time, day-to-day small pullbacks. Moving into the moving average band, a little bit more concerning. A break below, very concerning. And if you've been in long enough for the market to flip the moving averages, you're toast. Does that look anything like 2020? Does it look anything like the big drawdowns that I showed you? No. The only one that looks concerning at all is the Russell, and it moved back up. I love watching this during the day. Okay? You can look at dailies, you can look at weeklies. Make sure I'm all on daily. Ted, if you're watching this, not only would it be nice to have more data, it would be nice to have not just dots that change the symbol, but how about a time frame, a double dot? So if I wanted to switch the spider to weekly and everything else to weekly, I could just touch one thing. All right, so I like this as well. And then I was spending a lot of money on unusual options activity. I looked at black box software. I looked at Vigo, I think it's called. Is it Rose? I think is the guy's name that has a number of different programs. Heck, it comes for free in this one. So you can look at top 5, top 10, top 25. Let's look at top 25. And you can look whether you want ETFs or not. And you could look for, does anything have highly unusual? No. What had unusual? It tells you the number of their unusual, their rank. Now, the fact I don't have ETFs is probably why you don't see all 25. So basically, you're showing colors are the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All the top ones there are ETFs, so I might not want those. And I could look for $1 million premium trades. Things that might be earnings related, aggressive activity, aggressive in size, at the offer, so I really want it. Bullish hot money. Bullish flow, bearish flow. I could come down here and I could choose what category I'm looking at, and it will give me a list of those entities. The wrench, I can kind of set what I'm looking for as the columns. The WSI is another one of the algorithmic tools for measuring strength of the underlying. There's Avigo with unusual options. I mean, this comes free in the program. Well, free is the wrong word. This comes as part of the program. There's your top 25, I guess, or whatever I picked. So basically, to me, it's an integration. I can bring my stuff over. I can run scans. Perhaps the most important piece is the fact that I could drop into Wealth Scanner and take a look at where the algo score is, wanting to buy things that are 700s and 800s. And this is a pretty heavily screened list, and there's a lot of 800s I might want to look at. Okay, it's the fact that there's multiple outsider integrated indicator sets. There are chat rooms, there are help sessions. Something I don't spend enough time with supporting that I'm going to start doing is you have people that will, did I take that out? Oh, dummy. Smart people. Oh, look at this. This is one of the ones I was talking about. This is one that I brought up AEHR earlier as a potential long. So somebody else has identified this, has put it in this tool. Let me see if I can get out of that and show you what I wanted to show you, but I probably screwed it up. Called Wealth Thoughts. And, well, here it is. You can see who put it in there, and you can learn about it. Here's the post. You can view the post. And you can actually follow this live in the program when the market opens up on Monday to see what it does. So I think this is a cool tool. It's something I like to look at, but I'm going to start posting in Wealth Thoughts as a place to do some daily things. And on that note, I'm sure I put you to sleep. It's been an hour and 40 minutes. On the wealth charts things, Wealth 365 is coming up, and let's see if we can't find it. So I would go Wealth 365, WEL 365, and it's probably much easier than it looks. Wealth 365 prize sign up. Well, that's great, but we want the prizes, but we want to sign up for the meeting. Oh, let's see, Wealth 365, January 2022, SIGN up. This is one of the things I should have done before. Wealth 365, prize sign up. Yeah, I don't know why I'm having such a hard time finding the sign up. The event is Wealth 365. It's a great educational event. You have probably seen things come across your email box. I would sign up and join, and I'll find the link and I'll put it in underneath the YouTube video and in my email out. You all have a great week. Again, happy holidays, and keep in mind, small volume equals lots of potential for volatility. And this could be a week, interesting week. Let's see if we can get those all-time highs. Goodbye, everybody.